What's up, everybody? Dave Bartosiak, and I've got another chart of the day for you, following it up on that awesome action we saw in Taiwan Semi. Today, we're talking about NuScale Power Corp, ticker SMR, and I reached into my bag of tricks. Okay, now I'm using our free, that's right, our free Zacks interactive charts here, and our partnership with TradingView. And what they do is they limit you to 2 indicators, okay, when you're doing this thing on the free part. Now, so I normally just have 2 moving averages. I normally have the 200-day, which in this case is this red one, and the 50-day, which in this case is this kind of orangey one, okay? But if you use the moving average ribbon, you basically get 4 moving averages in one. And you can go in and you can change what these are going to be and such, but I'm just leaving it like as it is, okay? So this way, you can get over that limit of only 2 indicators. So in this case, I basically have 4 indicators here, and then my 5th being the relative strength index. And I wanted to put this in here because when I'm doing my charting, I look at this. And I know in our charts of the day, we don't really bring it up because I like to use the free Zack stuff, not what I pay for. So just a way that you can gain in the system a little bit. So SMR, as the name implies, the small modular reactor company here. So that's the S, the M, and the R. So in this case, nuclear reactors. So small scale nuclear power. It's something that's been in the news a lot as we're trying to figure out how we're going to power all this AI. So a very appropriate thing to look at. This stock loves to do these spikes and dumps and spikes and dumps and spikes and dumps, indicative of your, more high volatility stocks. And I want to use this RSI. So whenever there's 2 key levels to check out with the RSI, it's 30, which is down here, 70, which is down here, as this goes oscillates in between 0 and 100. So this is an overbought, oversold indicator. So any levels up above 70, like we saw there, that indicates the market's overbought. Anything under 30, market's oversold. Everything in between, neutral-ish and approaching, bearishness here. Some people will look for trends in this RSI to break, or they'll look for divergence in the RSI versus the stock. So you want to see the RSI go in one direction and the stock going in an opposite direction. That's where the divergence comes from. But I really use it just as an overbought or oversold indicator. So let's zoom on in here. See the multiple spikes, of course. Have a few, and it ends up retracing, getting close to that 200-day moving average, rather. Big all-time high here, up over 32 in that bullishness immediately following election day. And since then, lower high, lower high, lower high, and heading lower. Not great for the long-term prospects. However, interaction with the 200-day. So we had a dip underneath the 200-day yesterday that was met with a ton of buying. That happened for the broad market too. Today, so far, we've got an inside day, kind of boring inside and to the downside. I think that's happening on the broad market too. Other thing is we're starting to get these moving averages rolling over, which implies this 200-day might roll over also, unless this bounce is for real. How do we know if this bounce is for real or not? One thing you look for is an oversold RSI. We're not quite there. Very close. Didn't quite get there. But it is important to note that it did get awful close. And you do see other times when that RSI does get close to oversold and bounces, something to keep an eye on. Also, again, key of that 200-day moving average. Tons of institutional money loves to wait for pullbacks to that level to start buying. And we've seen even along this bullish trend, big spike up, retrace. Under the 200-day, they bought it. Back retest, they bought it again. Another near hit to the 200-day, they bought it again. Now, getting a little bit deeper here. We can also draw our fibs from the September lows to the all-time high. And what do you know? 61.8 retracement is basically spot on where we're messing around with. So you've got buying pressure from that. You've got buying pressure from the 200-day, hoping to get this thing higher. Now, you're seeing the the short-term moving averages cross under the longer-term moving averages. That's not good, but I do like that this has come down to this 200 and caught at least a bid initially. Now, you can use yesterday's range to really tell you a lot about where this stock might go. So you already know that your line in the sand isn't necessarily that 200-day moving average, although you're going to hope to get some there. Really, you would give up on it below 1445. So it's setting up a nice, good little risk versus reward where you can look at getting long at 1572, which is where the 200-day moving average is right now, and you can put your stop south of 1445. If you're jumping the gun a little bit, you do have this fib right where we're at now. I'd still warn against just going, immediately to the other side of the 200-day for a stop, because you've already seen that the stock has carved out that low down under 1445. So decent risk versus reward, I think, especially since you could get a move much higher if we get bullish on things like this again. Now, I know that specifically, this stock, along with the rest of the AI stack, because it is sort of involved in it, it's really been under pressure because you've got the after the DeepSeek, we have this attitude that like, well, maybe we don't have to spend as much money as we thought on building out this AI infrastructure. You had Microsoft CEO talking about it. I don't know why they all of a sudden reversed course on that. I do see the inefficiencies of DeepSeek, but we're also not even scratching the surface on what we could really do with AI. So how can we come out and say that we're not going to need all those data centers and all that power? It's really strange. For me, it does look like a healthy pullback. And another thing to note is where this is happening right now, pretty close to that July peak. So you do have an area that was a ceiling for this stock now becoming a floor, at least in the short term. So I think it's a pretty good risk versus reward to buy something like this down here, especially when you consider we're up at 32.30 was the high on November 29th, and you're pretty much half that here. Okay. So a nice pullback to support on a stock like this. If you're a long-term player in it, it's something to look at. I did look at the Zacks rank right now. It is the Zacks rank number 4 sell, because those estimates have been going in the wrong direction right now. But if you're a long-term holder of the stock and you believe in the long-term bullish trend of what's happening here with SMR, you can do worse than starting the dollar cost average in a stock like this down here. There you have it for my chart of the day. Be sure to follow the author here if you're on Zacks.com. Subscribe to the YouTube channel. Come check us out again next week. For everybody here at Zacks, I'm Dave Bartosiak, and I'll see you then.